Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. All right, we got some big news out of Alphabet, aka Google. They are going to do a $70 billion stock buyback, which is huge, but it is something that has happened before. So let's go ahead and run down what this means. What are the other things you should consider if you are thinking about investing in this company? And then what am I currently doing? Which, if you've been watching for a while, you probably know what I am going to do. But let's go ahead and get started. So $70 billion stock buyback. This basically means that Google has money on the side, $70 billion they got to spend, clearly. And so they are saying, look, I like my stock so much that I am going to buy it. And essentially, this is an indirect way to reward shareholders. Now, personally, if you got $70 billion, Alphabet / Google, you could have just gave it to me. But because I am a shareholder, they're going to put that back into their own stock. That should boost the stock price. You don't invest $70 billion in a stock and the stock don't move up. That is extremely rare. So that's the case here. That's usually why companies start to do that, because they believe in their stock. They think that it's going to rise, and it's a formula for stock market success. It didn't really work for some of the airlines. You can go back and watch my thoughts on stock buybacks in general, but it is usually a positive catalyst, is a positive thing for the stock, in this case, going upwards. It is not the only time that Google has done this. In 2019, they did a $25 billion stock buyback, and then last year, I think it was a $50 billion stock buyback. So they are slowly, or quickly rather, increasing that number. 25, 50, and now $70 billion going back into the stock. So again, they believe in their own company. They believe in their own stock enough to boost its own stock price. There are other things you should know about Alphabet / Google as well. We'll get into that in just a second. The other thing that I thought was interesting that I read from CNBC is that it is not, or they said rather, that they are going to pay attention to the stock price and the market conditions at the time they're going to do this. So they're not going to drop $70 billion in the market tomorrow. They're going to look at the stock price and say, hey, based on conditions, we're going to put X amount on this day, X amount on this day, and X amount on this day. They're not going to tell us what day they're going to do it, but they are paying attention to market conditions and the stock price, and I guess time when they want to buy their own stock. So just pay attention to that. I wish we would know exactly when this would be. We really don't. A chart can tell you, but that's going to be after the fact. If you see a huge jump in the market, I don't know, 5, 6, 7% or something like that, that was probably the day they put money into it. Just throwing it out there. But in either case, what am I going to do? I'm going to DCA on Friday like I was anyway. I think Google, for me, is a long-term company, but here are the things that you want to know. Today, they also announced earnings. Earnings were mixed. YouTube did not make as much money as it was expected to. It was cited that TikTok is a threat, which I think most of us knew. We don't think that TikTok is going to replace YouTube, but whether it's a 2% threat, a 10% threat, a 15% threat, that is money that is going to TikTok that is not going to YouTube, and that has impacted their business. So they didn't do what they expected to do in terms of advertising revenue. Just throwing it out there. Do be aware of that. Also, remember, they are still doing that 20-to-1 stock split later this summer. That's going to impact the stock price. Generally speaking, when companies tend to do stock splits, the company does tend to rise within that year. So that means that in 2020, between 2022 and 2023, I would expect, from the time they did a stock split, I would expect Google to outperform the S&P 500 based on history. That's not a guarantee. That's just based on history, okay? So Tesla did it, Apple did it, and on average, most stocks that do this do tend to beat the S&P 500 1 year after they do that split. So for me, again, I already hold shares. I'm just continuously buy because I believe in the company for the long term. But these are things that you want to be aware of in case you're holding or buying or considering. So consider the stock split. Consider this $70 billion stock buyback. Consider that their earnings was a little mixed. I would encourage you to go and read up on how, what was announced and how things are going down with the company and what they expect and what they want to see in the future. The last thing that you want to consider is it is a tech company. Tech companies are not doing well this year, even though I think Google is healthy financially. Clearly, they're healthy financially. If you got $70 billion that you decide to just, hey, I'm going to just go back and buy my own stock, when you could have done a whole bunch of other things with that money. So they do have money, right? We do know that, but just tech as a whole, Google, Amazon, I was going to say Applesoft, but Google, Amazon, Microsoft, most of the tech names out there haven't done well this year. We know why: inflation, interest rates, and it's just not a great year for tech. If you're looking to make money, if you're looking to make money right now, tech is probably not the space. If you're looking to make money, I don't know, the next 1, 2, 3 years, this could be that temporary dip. This could be a buy the dip moment for something like a Google. And there's a difference for me. Netflix is down, 60 some odd percent. Google ain't down nowhere near close to that. Okay, so to me, Google is still a primary player. Google does not have the level of competition that Netflix does. There is no Disney Plus, Hulu. Netflix is on in the background right now, but let's see, Disney Plus, Hulu, Apple Plus, Apple TV, all that kind of stuff. You can't name that many competitors from their primary business. Like, yeah, you got Bing. Which one of y'all really uses Bing? Okay, like, yeah, TikTok is technically a competitor. You can be on both, but you know, it's not that big of a threat in that way in terms of taking attention away from their primary business. It does impact them, but it ain't the same level of competition as Netflix, Disney Plus, and the entire streaming wars, right? There is no search engine war. It ain't there, right? It doesn't mean that it will always remain that, but right now it's not. So I see it as a long core holding for me that I don't see anything scaring me away from it, even though it is down, and it is down in my view significantly. But this is for me, this is a good sign. You got to buy back. You're doing stock split. You're still a solid company. You're still profitable. Clearly, I'm gonna just keep on buying. I'm gonna keep on dollar cost averaging. That is not. I don't feel the same way I feel about Google. I feel Apple and Google, they're fine. Microsoft, I'm putting that in that category. Amazon, I don't know. I'm not feeling the exact same way. So even though, you know, I'm showing you how I'm thinking out loud about how some companies are, for now, untouchable, and some that used to be untouchable may not be. But I just wanted to give you a full picture in case you're looking at investing in Google right now. So again, I already hold it. I hold GOOG. I don't hold the voting shares. The only reason I don't is because when I signed up for public, I got a free share, so I just kept adding to that. The performance is similar. You choose which one you want to choose. It's not really going to matter, at least to me. But in either case, the thing is, they are doing the buyback. They did miss a little bit on earnings in some areas. This is not a great year for tech, and they're still doing the stock split. Hopefully I didn't repeat that twice. But those are the things that you want to take together and disseminate, or really digest, is a better word, digest that information, and then decide how you feel about the company and if it fits in your own personal investing plan. So y'all know what I'm doing. Mind my own business. Y'all gonna catch me on Friday, dollar cost averaging as usual. And it sounds like Google might be doing something a little similar. All right, that is it for me. If you want me to cover another company, feel free to let me know. It's going to be a very busy week. I'm stumbling over all my words. Got a lot more stuff to read and dissect as this week continues to go on. All right, that's it for me. I'll talk to you later.